Well, Jeff Hull is back with us with some investment lessons learned during the COVID-19 pandemic. And you and I were chatting about this off camera. I believe we are almost 5 years to the day when the pandemic really began. It was certainly March 20-something when we all were told to stay home and do a variety of things.
Yeah, absolutely. We weren't allowed to hug grandma. We couldn't go to restaurants, see our friends, congregate, get on a plane. And even got weirder. You know, you go to Costco and people are fighting over toilet paper for a respiratory illness.
Absolutely.
Like, it was quite a time, but it's amazing. It feels like a lifetime ago, but literally it was almost to the day 5 years ago. Think how far we've come, but more importantly, how far the markets have come. You know, there was a reordering of kind of the world, supply chains, but also there's a lot of lessons for economies and national security when PPE didn't show up, and all those kind of friends or even enemies that were supposed to ship things like PPE or raw ingredients for pharmaceuticals or microchips just didn't. And some of the friends became frenemies almost in the sense that they were not shipping and doing what they were supposed to do. So it really kind of reordered the ideas of what companies need. Even to this day in the States under Biden and under Trump, they want to make more and manufacture more on their footprint so they don't have to worry in the next type of pandemic or crisis. They have to ship something from the other side of the globe.
How do investors who see stocks down for a whole different set of reasons today find attractively valued stocks?
Strangely, it's actually the same thing. What people need to realize is to get great companies at a great price, you kind of need fear out in society a bit. Whether it's Donald Trump on nightly TV keeping everybody off balance and wondering or worrying, could be a temporary event-driven opportunity, a weather opportunity, or even another pandemic. Sometimes it's hard to get some of the world's best businesses at a discount, and the way we get those discounts is usually at a time of crisis or worry. So I always say fear stands for false evidence appearing real. A lot of people have emotional worries that sometimes aren't in reality, and that's where you start to find good bargains on great businesses out there.
I'm just looking at my history on the S&P 500. It was March the 23rd of 2020 when the rally began. That's when the sharp bottom was reached in the marketplace, and it was essentially all up for the better part of a year after that. What sectors do you find most appealing right now?
A lot of the same ones in the sense of the subscription economy is interesting. Even companies, whether it's a Netflix or a Spotify, just like in the pandemic, they were real winners. Now, under the threat of tariffs, whether they're real or not, or on or off, these companies don't have to worry about tariffs. Netflix is just in the cloud. It actually operates off of Amazon's web service. There's no border that has to wait for when they ship you a movie whether you're streaming live. There's no tariff. There's no truck transport, train or plane. You have to worry about the cost of fuel as an example. So they eliminate a lot of those worries, and it's just a simple business. And if times get tougher and there's a recession as an example, maybe that family won't go out and take their kids to a movie and popcorn. They'll just stay at home and watch Netflix as an example. So that same kind of sheltering in place or whatnot, just like there was in the pandemic, can actually happen to families at times of difficult markets and difficult economic times.
How do you avoid making a wrong step? PayPal was a huge winner in the pandemic period and after, and then in the years since has melted down in a big way.
Yeah, to use a surfing term, you got to know when to ride the wave, but more importantly, when to get out of the way of the wave before it crashes. So there's companies out there like Peloton, like they couldn't have had a better blessing. They went from a nobody firm that almost went bankrupt, and then all of a sudden, you know, their blessing was that every gym and competitor was closed around the globe, and they did over 10 times their sales all in 6 months. But then everyone that wanted a Peloton, I kind of bought one by the end of the pandemic. So that's when companies can suffer. Even Zoom Video, that came out of nowhere. It became a verb during the pandemic. Again, stock rallied up. And then as people used other platforms, Microsoft and others started to catch up with technologies, people shift. So I think the biggest thing for investors is know when to pivot and have your plan ready so that you're ready to move left or right, whether you have to or not. Same with tariffs right now under Trump. Are they on or are they off? Which countries are they on or they're off? You don't know. As long as you're ready to pivot, keep some cash on the sidelines ready to take advantage of those bargains, but be ready to take advantage of anything that comes your way.
Seems to me companies and investors pay a lot more attention to supply chains now than we did prior to the pandemic. We all learned how important supply chains are and how different things are when supply chains are flowing normally as to when they get clogged up and delayed. How should investors think about that today, the supply chain issue?
They should, because that's a lot of things affect that. Even, like I said, the cost of fuel from the other side of Earth for products is a lot more difficult. Even natural gas in North America for certain manufacturing and products, way cheaper than Europe as an example. So even how goods and services, liquefied natural gas moves, even just goods and products and services, But again, back to that subscription economy and services off the cloud that don't have to worry about borders, holdups, tariffs, things like that can really help those companies be more mobile and control their costs and right-size their business up and down a lot easier when they don't have those same worries.
Amazon was a big winner in the pandemic for reasons that are not difficult to understand. Do you like that stock?
I do like actually Amazon. Again, it depends on the individual investor, but there's a business that's very diversified. They own Whole Foods, they own MGM Studios. Actually, a few weeks ago, they finally picked up the rest of the 50% rights to the James Bond franchise. So now they control 100% of that. They bought it from Europe's, the Broccoli family. It's a strange name, but that's their last name. The Broccoli family used to control 50%, but 51% of the vote as to who the James Bond actor would be, and rights over top of the script. And what could the script could look like. So now Amazon controls all of that. And that MGM studio, whether it was the pandemic or now, they can repurpose all that century worth of movie library to repurpose movies, change them, rescript them, just bring them out again 30 years later with new scripts refreshed. So it's a great franchise that way. But of course, their core business is their retailing out around the world. But more importantly is that Amazon Web Services, that pole position in the cloud, they still hold that in a strong position.
That's Jeff Hull and some of his thoughts over the past 5 years from the pandemic through to today.